The S&P 500 had its third biggest green day in history yesterday after President Trump announces a 90-day delay in tariffs as well as a 10% reciprocal tariff on the countries that didn't retaliate. Pretty much every country got a break on tariffs besides China. The trade war with China continues to escalate and we see increased tariffs from both sides. In today's video, I want to break down the recent market drama, share my portfolio update, and what I'm doing in this crazy market. As you see, a little red day for our portfolio, down 5%, but keep in mind, yesterday I think we had our biggest gain ever. Our portfolio was up nearly 20%. The entire market was just soaring after Trump announced the delay of tariffs. The S&P 500 closed almost up 10%. The Nasdaq was up over 10%. Hands down, the biggest green day I've seen my entire life. Now, what do I think about these delay in tariffs as well as the 10% rate on the countries besides China? Me personally, I'm a little mixed on the delay. I believe the market will still be volatile over the next 3 months until we get more and more clarity on the tariffs and their implications, as well as how they're going to impact the company's earnings this year. I'm very interested on how these Q1 earnings are going to go. What is the guidance going to be like for these companies, if they even give guidance, because I'm not even sure if the companies know how these tariffs are going to impact their earnings. So make sure you guys expect much more volatility in the days ahead. Now, in terms of the 10% tariff rate, I am a fan of this, and I do believe this should have been the strategy since the beginning. I believe the original tariff rates were just too steep, and that's why you saw this crazy correction in the market over 20% down. But then you can also make the argument this is all just a negotiation tactic. These insane tariff rates were just used for the US to get their way and get lower tariffs on both sides of the field and just a lower cost of trade. Now, China, on the other hand, I believe is going to be a tough cookie to crack. We keep raising tariffs on them and they keep raising tariffs on us. However, this can go on forever because, like, what's next? We're going to put a 1,000% tariff on China and China's going to put a 2,000% tariff on us. Like, it can only go so long. I believe we will get a negotiation down the line eventually. Right now, I think it's just a little bit of an ego thing, not to mention the bond market. Now, the bond market has been quite the problem recently. Obviously, the US has a lot of debt that we need to refinance, but in order to do this, we want the best rate possible. We want to see these bond yields go down. However, recently, with the market crash in the beginning, you saw bond yields going down with the stock market. Now, on the other hand, it's a different story. You have bond yields rising with the stock market going down. They're not correlated anymore, which is very weird and not how it usually works. Now, I've heard a lot of theories saying that China could be dumping bonds, Buffett could be dumping bonds, somebody's dumping bonds is the theory. Regardless, it's not what you want to see. You want to see these bond yields go down. That way we can refinance debt for a cheaper rate. Another great headline that I'd like to bring to you guys' attention is the CPI report that we had this morning. Inflation, pretty much. Inflation rate drops to 2.4% in March, lower than expected. This is amazing news and exactly what we want to see. Now, if we did see these steep tariffs go into effect, inflation going forward will be a little stickier or a little higher. We don't know yet. But as of right now, inflation is down, and this is great news. We want to see the Fed, Jerome Powell, cut rates. If inflation is coming down, there's no reason for rates to remain high. So in the next meeting, I'm hoping we at least get a 25 basis points cut. I would not be surprised to see him hold rates steady, just due to all the uncertainty with tariffs. But nonetheless, it's a great news. The market was red regardless, which was quite surprising, but I believe that is due to the bond market. Not to mention, you also have oil and gas coming down. This is also positive for our economy. One thing that I thought was very, very interesting is before the huge pump in the markets, you had Donald Trump, our president, post on Truth Social, this is a great time to buy. About 3 to 4 hours later, you have him announce the delay of tariffs and the markets soar, making records. So this market and this volatility has been nothing short of entertaining and exciting. The volatility is insane, and I expect it to continue throughout the next 3 months. But one company in particular that's going to really benefit from this volatility, in my opinion, is Robinhood. Sitting right now at $40 a share, all this buying and selling and crazy volatility that's going on is really great for Robinhood's transaction volume. If you don't follow me on X, guys, I really recommend you guys follow me. I post a lot more on there, and it's all stock market related for the most part. I made a post this morning after I got a notification from Robinhood saying they're launching new prediction markets for economic events. As you see, you get the Fed decision in May, Fed fund rates in May, inflation in April, CPI, job numbers. So many new prediction markets, and Robinhood is just silently rolling all of these out. And the way Robinhood makes money on this is the spread. For example, we're talking about the Fed decisions in May. Let's say the rate is 48% for no cuts and 50% for 25 basis points cut. That 2% spread is how Robinhood makes its money. The prediction markets are basically person versus person. Robinhood just makes money on the spread. But this just comes to show, guys, CEO Vlad Tenev is just executing extremely well, extremely fast, and is restless. Not to mention, any golf fans, you can bet on the Masters on Robinhood. Very exciting stuff, very exciting, and I am proud to be a shareholder of this company. So how am I navigating myself through this crazy market right now? You guys know what I'm gonna say. I'm a broken record. I say it every video. I'm just buying my high conviction names, high quality growth companies. Right now, I've been on a Hims and Robinhood kick. I plan to do the same next week, taking advantage of this volatility and loading up shares on the cheap. Once the market gets in better shape and is more risk on, you will see these companies trade much, much higher and at higher valuation multiples just because the market is willing to accept a little bit more risk. And that's really it for today's video, guys. I wanted to make a quick video just sharing my thoughts on the crazy market news we've had recently. Let me know in the comments down below what you guys are doing, what stocks are you buying or selling, and what are your thoughts on all this chaos? As always, thank you guys for watching. I really appreciate you taking time out of your day to watch my video. Be safe and take care of yourself, guys.